Good afternoon, traders. Welcome to Stock Market Movers. Are you guys excited to dive into today's show? I'm excited. We got another great one here. A lot going on out there right now. Now, the question that I'm starting to ask, did we get, of course, a market topping action there? Inflation Reduction Act also being talked about out there. CPI data, New York Sentiment Survey being put out there. Fed interest rate outlook. Nvidia tech wreck, Wall Street's bets short squeeze, Pfizer, Tyson, and of course Palantir are some of the topics we're going to talk about today. We got a great guest, of course. We got two interviews like always. Shawn Cruz coming on, head trading strategist of TD Ameritrade, and Thomas Hayes, chairman and managing member of Great Hill Capital. You guys know these are two of our favorites. We're going to dive into those expert interviews coming on up. Let's start diving into today's topics. We got a lot to talk about. Let's get into it. Stock Market Movers. I'm your host, Money Mitch, and let's dive into it.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.
All right, traders, as you guys see the topics rolling by, we're going to go ahead and dive into today's show. There's a lot to talk about, and I think a question that everybody's going to be asking themselves, and I can't blame you for asking yourself the question now, is the market rally going to turn around or not, right? Did the market just put in a top on this rally? That's what I'm starting to question as we take a look here at the SPY. Of course, we've been watching here to see what happened. There's a lot of fight here in the 413 area. We're coming right back to it today. As you see, we're starting to leak out here on the SPY. Now, one thing I will point to is on the daily, when I was down here, I was calling for us to get that nice bounce there around the 17th. And I might have been 1 or 2 days off there, but definitely was looking for a push down there towards the 23. Anything below that on the RSI was something I was looking at. And we got a day where we went to 2130. Now we're all the way back up to overbought, right? Well, what's the extremes here? Last time we turned around, which was right around this kind of rally, right around here when we were at on March 29th, we turned around about the level of 77.42. And really, when we started dropping off, we were around the level of 76.56. If you can see, that's right around the topping action that we're having right now. Really extremes to the overbought are anything up above 85s on the SPY. And so that's what I'm watching on the RSI to show me kind of, are we going to get that reversal right back down? Of course, this is nothing to say that the top has already been put in, but the question is starting to ask, did we put a top in on this rally? Now, another thing I think you need to keep on watch here is, of course, what happens out of the climate bill and the Inflation Reduction Act, right? This was just passed with a 51-50 vote here, strictly along the party lines. It just followed exactly because of the party lines. Now, one thing that this does include, of course, is this includes $430 billion to combat climate change and extend the healthcare coverage. This also is going to extend, of course, the EV tax credit. And so with this being said, you could see some kind of EV stocks take some lift. You could see some charging stations take some lift. Also, this will help out stocks like, let's say, GM and Tesla that weren't going to be able to get those EV credits. They're going to be able to get another round of credits that should help them sell the vehicles faster. Now, of course, this is also helping solar stocks, as solar stocks were really pushing early on in the day. Let's go ahead. Let's take a look as you're seeing some topping action in some of these solar stocks. So it looks like it could have been a buy the rumor, sell the news thing. But this morning, solar stocks we're still bouncing. JP Morgan actually put out that shares could rally more than 20% with the passage of the latest government climate bill. Well, just keep in mind, remember that some of these stocks and they mentioned First Solar. So let's take a look here at First Solar, getting that raise there by JP Morgan, upgrading to overweight from neutral rating. They said that this one could make a 20% move. It made a 5% move and now trying to come back. I actually like this hourly pullback. It doesn't look too bad. If you take a look here at First Solar, I mean, a 20% move from here is going to put it up really, I mean, at all-time highs. So we'll see if it's able to get there. Of course, this would be just from where we are now to that. That's about 11.5% to get towards that all-time high through the 120. So keep your eyes on First Solar. It could take a pullback today, could take a pullback for the next couple of days, but JPM says 20% move could be into play here with First Solar. So keep this one on your radar. Let's get out of the climate bill and the Inflation Reduction Act talk. Let's go towards the next one, which is, of course, watching the CPI data this week. Everyone has their eyes on inflation. Of course, everyone already coming to the assumption that inflation has peaked. And so you got to keep your eyes on that. CPI data is expected to dip to 8.7 from July's high of 9.1. So we're looking for a dip about 0.4 on the year-to-year rating. Now, of course, 8.7 doesn't mean that, it's back down to 2% by any means, but it's something to show that the peak has happened. And of course, if we get closer towards that 9.1, let's say reading about 8.8, 8.9, maybe even 9.0, that's what would really be concerning, showing that inflation isn't going down as fast as needed, and the Fed might have to step up their horse to catch on up. Of course, we also got some other data that was released, and I think it's important to kind of keep on watch the economic data that is going to lead the Fed towards their next decision on their interest rate hike rate or not. We did get the New York Fed Reserve to step on out there with their monthly survey of consumer expectations. And what did this show? This showed that the expectation to inflation to run 6.2% pace over the next year and 3.2% rate for the next 3 years. Of course, this is a huge drop off considering June's survey had shown 6.8 versus a 6.2 that just came in, and a 3.6 versus a 3.2 that just came in for the next 3 years. So huge drop off from that survey. Of course, this shows that the consumer is getting a little bit stronger, starting to feel a little bit better about inflation. I think this is something that we all keep an eye out for, because of course this is going to affect the Fed outlook. And I think this is something that we're all watching. Now, traders are starting to price in, and the way that you can do this, you can take a look at the CME tool, the CME Fed tool. You guys can just search that on Google and you'll bring you right to it. And traders are now pricing in the likelihood that there's a 75 basis point hike rate next month. Of course, we'll keep on watch the economic data that comes out, because this is going to be dependent on really what the Fed does, because the Fed keep telling us they're data dependent and they need to see inflation peak. But another thing just to mention, we got really strong jobs data that came in on Friday. So what will the Fed do is a big question to ask. All right, let's get out of the Fed outlook. Let's talk about the story of the day. And it definitely came with Nvidia, as we gotten some pre-announcement. We've talked about it here on Stock Market Movers, that pre-announcements could come all throughout the earnings, of course, coming in for the Q2. And now the question is, did Nvidia pre-announce and create a tech wreck? That's the question I throw out to you guys in the chat. Tell me what you guys think. I'll catch it up in the chat. I see Andrew, Constitution, Born, what's up out there? How do you guys feel about this bull market now? So did NVIDIA's pre-announcement create that tech wreck? That's the question that we're asking. And what did they really give? Well, they gave revenues going down to $6.7 billion versus the $8.38 billion expected. Of course, that's pretty big change there. Why did they state this? Well, they stated because it's lower in gaming products, reflecting a reduction in the channel partner sales, likely due from macroeconomic headwinds, challenging market conditions that are expected to persist in the third quarter. So big red flag raised right here by Nvidia. How will that make and react to the other tech stocks? That's what we need to keep on watch. So the question here is, will it continue to drag other tech stocks? Let's take a look at the Qs. Qs you saw today really get hit in the pre-market, came back in the intraday market, but then got hit lower than those levels where it was hanging on there around the 322. So if it can close above this level, it won't be looking too bad. Let's say the 322.46. But if we close below that, that's when I would really start getting concerned about potentially seeing more of the tech wreck. So I'm going to keep watching to see what happens on these. Today, I actually traded, full disclosure, I traded this one towards the upside, which is spce, which is a actual paired leverage for Dextron. This is 3 times the leverage towards, of course, the opposite side of what I was looking for, which was a downturn in the Qs and a downturn in Nvidia to continue down. Now, it did bounce around that 172.43. We'll see how this continues on in the day. Let me catch up in the chat. What do you guys think? Put a 1 if you guys think this will create a tech wreck. Put a 2 if it's just Nvidia and not going to potentially take down all of tech. We'll see what happened there. Am I still in spce? No, I am not, Beach Bum. I actually sold today. Top shares were up there towards the 38.75, and then I could not get it to 39. I actually sold the rest of the shares at 38 on this pullback. Was looking for a nice push here above 38.75s. Took the 75s, then was looking for 39s to get the last little piece out. It came back to 38. I got out there, but a big win for me in spce, and we'll see if this can continue to happen. All right, so I see some 2s. I see some 1s. Looks like the 2s are winning, actually. So it looks like you guys think this will not create a tech wreck. We'll have to see what happens there. All right, let's get out of the story of the day, which was Nvidia. Let's go towards the next story of the day, which we all thought would probably be the story of the day before that pre-announcement. And it was all about what? Bed Bath and Beyond, getting that lift. And the question is, Wall Street's back at it, baby. As you see in them getting on up there, Bed Bath and Beyond got up there towards 1288. We'll see if this can continue making runs. If you take a look at the daily chart, this has made a huge run lately, but it hasn't just been, Bed Bath and Beyond. It's a lot of stocks, right? You saw AMC strong today, up there towards 27. We've talked about this one for a while. If we could get back to 20, this one could squeeze. And what a day it was here, getting that lift back towards 25.56. And if you take a look, GME was making a nice lift also. Going to keep this one on my radar. And it's not only these, right? I had another one today. I ended up getting stopped out in it. I was holding on Clover, but you guys can keep watch. There's a lot of these that could make big runs. Of course, I'm going to keep watch some of the bigger names like AMC, but some of these could get lift, and Wall Street's bets could be right back at it. Tesla reclaiming 900. Yeah, it's trying to reclaim 900 there, trying to continue that push back. We'll see what happens there. If it closes above 900, it's not a bad close for Tesla. And, of course, their split is coming on up after it's already been voted. All right, let's get out of the Wall Street bet stocks. Let's start taking a look at Pfizer. Looks like we're a little bit late on our first interview. I'm going to go ahead and check on Shawn Cruz. He should be joining on up here in just a few minutes. But we'll go ahead and just continue on with our headlines. All right, let's get into the next headline, which was Pfizer headline coming on out here. And I was wondering how this is going to trade off of this because it was making a move on the rumor and it was actually coming on down on the rumor. So it's interesting that it's still coming on down here after it said Monday it agreed to buy blood disorder drug maker Global Blood Therapeutics in a $5.4 billion deal. Pfizer would pay $68.50 per global blood share, and that's GBT, which is Global Blood Therapeutics. Let's take a look at GDP, how it's trading today. You can see it's kind of going sideways here, not doing much, trading right at what? Right near that level. So, of course, when this news comes out, it could get up there towards that 68.50. And you can see it tried to get up there in the pre-market. It actually got higher than that. It went to 73.02. So some of those ARBs coming in and knocking it back down below that. We'll see if it gets back towards that 68.50 price point. Another one you guys can keep on watch is Berk. Berk, I would definitely keep it on watch. Let's go towards Berk. They came out here with their earnings. Let's go to B. So here you guys see it around the 294s. daily chart trying to hold and get back towards that 300. Now, the only question to ask ourselves is if growth trade is pulling back into favor, will the value trade fall off the tape here? And that's the main concern with Berkshire Hathaway here. Now, Berkshire Hathaway's operating earnings totaled $9.28 billion in the second quarter, marking a 38.8% increase from a year ago. The company did post a $53 billion loss in its investments during the quarter and has been taking a stake in Occidental Petroleum, right? We now have a 19.4% of Occidental Petroleum stake worth $10.9 billion. So something to keep on watch. Will kind of Oxy continue to get bought up by Buffett? Well, we have seen that he bought up there on that pullback to 57. This is something that we all need to keep on watch because Buffett, he doesn't lose often. So I'm wondering if he bought more Chevron and that kind of move. But something that I'll keep watch, of course, is Buffett's buys to see if he continues to push into more and more energy is something that I'm watching to see if Oxy can come back up there towards, let's say, the 70s, eventually 71 and 72, getting a nice little breakout. We'll see what happens there in Berkshire Hathaway. All right, can we look at some of the boring stuff like JPQ and JPI or JEPI? I got you, Andrew. Just stick around. I'll get through I'll save some time for ticker time for you guys to call out some tickers, and I'll go specifically into those. Got no problem with that. Rand Upstart. Upstart has earnings later in the week. Keep that one on your radar. Not bad one to keep on watch. Even though I call it down stop, who knows? Maybe it's time to get it up started again. All right, getting out of Berkshire Hathaway, let's go into none other than what was hot and what was not. My favorite segment of the day, where we touch about the sectors that were moving and we look for rotation, because rotation is what I always tend to get my edge off of. So let's take a look here at energy. Energy coming on back here. I thought this would get back there, and it's looking interesting. It's holding sideways, not looking too bad. You can take a look at XOM, very similar chart, right, to the sector. As we're starting to push back up towards the upside, this is one that I'm going to keep on watch. What do we need to see? We need to see a move back above 95 this week to really give us that insight that, hey, we're looking to make a nice push on up. We've retraced on the weekly. If it could close above this kind of high, 96.93 on the week, we'd put in a bullish engulfing candle there, and it will start looking like it wants to break out again. We'll see if oil breaks out or does it turn around from here. Definitely energy hot today, up 1.08 from the open, and then consumer cyclical behind that. But don't forget some of these gas plays, right? Some of the refining and gas plays that I'm going to keep on watch. UNG is one that we're definitely going to keep on watch. But I've been keeping a close eye on a lot of these because you never know where the next move is going to come from, especially in oil. I think that we're going to have eventually a nice run here. You're starting to see some lift in some of these, so keep these on watch. We'll see what happens with some of these oil names. All right, now it looks like we're going to go ahead and finish up what was hot and what was not here. Consumer cyclical, department stores up significantly today. Looks like Macy's and Kohl's leading the way there. Not looking too bad on those. Getting some little bounce back. Luxury goods and gambling continuing the lift. Looks like DraftKings got up there again towards the 19s. Couldn't get through that 1929. But I also saw Penn getting some nice lift here. We'll see what happens with this one. It did push on up. Will it catch the bounce as we see and go into, of course, the NFL season? We're going to see more and more mentions of preseason going on in NFL. And the question is, will it make a run into the NFL season? We'll see what happens in Penn. What was down today, what was not hot, was utilities. Utilities actually in the red today, and technology right behind that. Of course, we talked about that with the tech wreck, but utilities also coming on back down. So it's something that I'll keep on watch. One area that I've been watching is regulated gas in utilities. So a stock like CNP, let's take a look at the daily. We've been watching this one. It just did a nice little pullback day on Friday, kept the trend line. Now I want to see if it gets back through that 32. This will be a good outlook for, of course, regulated gas. Will it catch the bounce? Same thing here for ATO. Nice little pullback after a nice rip. about 3 or 4 days down here. Let's see if it dips one more time and then starts making its way back towards 120. These are some of the stocks that we've been keeping a close eye on in regulated gas. And look at this one, NFE, trying to take that next step up there towards the 60s. We'll see if it gets back up there. Resistance at 55. After that, I do think it could get towards the 60. It's one that we'll definitely keep a close eye on. All right, there's another area that, of course, you've got to keep on watch, regulated electric and power. We'll see how those keep moving. I saw XEL being one of those that has been pushing lately. Had a nice week last week, pulling on back this week. We'll see if it gets through the high of 75. All right, let's get out of what was hot and what was not. Let's go diving into our first interview today. That's what it's all about here on Stock Market Movers. It's about trying to get to the expert opinions that you guys need to stay in the informational edge. Like always, we try to get through all the headlines that are out there on the intraday market and, of course, get to our experts. So first one up, we're going to get into it with Shawn Cruz, head trading strategist at TD Ameritrade. Got some fun insight to dive into on that one. Let's go ahead and bring him in here. I'm going to play a quick trailer, and we'll go ahead and bring him on.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
That's what I love about you guys. You just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's bring on here none other than Shawn Cruz, head trading strategist at TD Ameritrade. Welcome back, Shawn.
Hey, thanks for having me. Always great to start the week off chatting with you.
Definitely. I wonder how the weekend went, but even better was a focus on the sentiment around. And so one of the things that I've seen TD Ameritrade really get into, and this was interesting, it really is, of course, the Investor Movement Index. Can you explain to us about this and what it's really used for and how we can be better by focusing and staying with, of course, the Investor Movement Index? This, of course, coming out of TD Ameritrade.
Yeah, so what we do is we just take a look at client activity across the board, and we don't just focus on net buy, net sell. What we're, that's part of this. But the other thing we take a look at is sort of the manner that they are choosing to buy or sell. Some of those names out there, are they being very aggressive? When they're being very aggressive, going into some of the riskier parts of the market, that's where you see the IMX moving higher. But if they're actually maybe being a little bit more conservative and finding lower volatility, some of the less risky, less frothy names, that's when you actually see the IMX moving forward or moving lower. And it's a good measure of not just, are they buying, are they selling, but what are they buying and what are they selling? And you can get some interesting insights just into the perception of how a lot of these retail investors who have a very big footprint in this market, how they're viewing, their risk sentiment, how they're viewing things, how they're viewing the outlook. And it's interesting because it's not just we ask some people how they feel about it. This is taking putting your money where your mouth is. What are they actually doing, putting their money to work or not putting their money to work in some cases? But that's really why we focus in on this. It's not it's sort of a, hey, here you go, fill out the survey, tell us how you're feeling. It's based off actual trading data.
Like it. So it's not just sentiment out there. It's kind of even more. It's on real data. And I like the approach there. Now, one thing I did want to bring in is the chart and how it's versus the SP 500. How could we view the relationship between this so that traders can have a better perspective on the markets?
Yeah, and I think it's interesting if you look at this. There's really a little bit of chopping out.
One second there, Shawn. I don't know what happened there, but I don't know if it was my internet giving up or your internet giving out. But for a second there, we started cutting out there. It's still a little bit off there. Let me see if I can fix this right quick. Let me just put you in the back right quick and bring you back. Let's see. All right, Shawn, let's see if it's fixed there.
Yeah, is that better?
It's 10 times better, man. I couldn't even understand you before that. Perfect.
Okay.
All right, let's go ahead. Let's dive into it. Here's that chart here about investor movement index versus the S&P 500. How could we use this as traders to better understand the relationship, not only with the indicator, but also a relationship with the S&P 500?
So you can see it in some ways it really tracks the S&P 500, but it was a little bit more of a leading indicator before the selling that started this year. If you look where it kind of peaked out, it actually peaked out around November of 2021. And we didn't really see the market start selling off en masse until I would say we're a month or two into 2022. So I think it shows the shift in perception of what investors were viewing as the outlook, how they were feeling about, how their comfort level was sitting on some of these names that they're probably having some pretty solid gains on. It gave you a little bit of a sense that they were already starting to come a little bit cautious around what was going to go on with the Fed hiking rates. You had a little bit of gasoline poured on that fire with the Ukraine-Russia issue that really caused a huge global supply chain crisis, or I should say, make the existing crisis even worse. And that just sort of accelerated and caused that downward move to continue. But it shows that there's still a lot of uncertainty and risk perceptions moving forward are not necessarily flipping back to, hey, we're fine, we're in the clear, everything's behind us. There's still a little bit of caution out there. They were actually net buyers this month, but they were buying some of the safer, less volatile names that were out there. And I think that's reflected in the chart. I think when you get a sense of what's going to happen with the outlook for the economy, what's going to happen to inflation, we've got not just geopolitical issues with Russia, but now we have the sort of lurking issue of an escalation between the US and China over what's happening with Taiwan. A lot of those are still lingering out there, and I don't think you're going to see a massive turnaround in the IMX where everyone is really feeling good about going out there, venturing into some of the riskier areas of the market until we get some clarity on those three main situations.
Now, I'd like to ask you, how do you felt about the recent rally? And do you feel that we've gone a little bit too far, too fast, especially from the bottom?
Yeah, and I think that is the bigger thing to focus on is, there was a huge rally. You were sitting on some very nice gains at the end of the year. And when you started to realize maybe the gravy train that was fiscal and monetary stimulus that you had pretty much over the entire course of the pandemic, as that was starting to get pulled away, not only was the Fed going to start dialing back some of the extreme measures they took, you think about it, they were actually going out there and buying corporate bonds at one point, and the ETFs behind them. That was something that was really unprecedented. So it wasn't just that going away, but rate hikes, winding down the balance sheet. I think with all those things in flux, investors are already getting a little bit cautious, and they were able to start taking some profits ahead of time. Now it is going to be a matter of keeping an eye on some of the individual names that they're interested in and that they're going out there and seeking exposure to. In this latest report, one thing that was interesting was they were going out and finding semiconductor names, particularly AMD and Nvidia, that they were net buyers of and increasing exposure to. Well, they were shedding or steering clear of some of the other names out there. Intel was one of them that they really weren't as interested in. So it's a little bit more than a stock picker's market, especially in the semiconductor space. And I think in the report that come as you start to see maybe the worst thing behind us, but we're not in the clear yet, that mentality show up here. It'll show up in just looking at some of the names.
Hey, Shawn.
A little bit more established names.
Excuse me for interrupting. I don't mean to interrupt there, but we're going back to my, I would say, like the chat says, our alien voice. So I'm going to actually get you on out of here a little bit early today. I'm going to bring you back sometime maybe later in the week. We'll fix up the audio issues. We'd love to have you on, just like the chat says. They love hearing your opinion.
Sorry about that.
So we're going to bring you back. Don't worry about it, Shawn. Sometimes it happens to me all the time too. But definitely I'll keep on watch to see what happens there. I did want to expand a little bit on NVIDIA. It seems like it's getting a little something in and out. We'll see what happens. Do you feel that this will bring all tech down, or do you think that it's just kind of more something that NVIDIA gave us a pre-announcement? I'll give you that. I think we'll sneak in here.
Yeah, I mean, I think if you're asking, what I think is going to happen markets, and I think the inflation data is key this week.
Yeah.
That is, to me, is the risk is if there's a surprise on the upside, if we come in at 9% or God forbid even higher, that is going to be a huge, I think markets would have a significant response to that. Anything lower, I think can help. I don't think anyone's going to say we're totally clear of the inflation situation until we get a lot of the data points we track, not just the CPI report, but some of the PMI reports that are out there where we can hear from purchasing managers. Until we get an across the board sense that inflation is moving lower, I think markets aren't going to really get a lot of that upside move. But producer prices are also something you want to keep an eye on. If CPI doesn't move too much higher, but producer prices do, that means they're not passing those costs along, and that's going to impact profitability for these companies. It can actually indicate margin compression, and that could also be another sort of scenario where the market might respond in a negative manner after we get those numbers. So Wednesday will be the first shoe to drop. The second one will be Thursday, and so I wouldn't be sound the all clear one way or another until we see what's going on with producer prices next to what the consumers are paying.
Yeah, definitely. I'm going to keep eye on that. And also, I would believe we also get another CPI data report right before the Fed makes a decision. So I think we're all going to keep watch the economic data that comes out. Thank you, Shawn, like always. And I look forward to having you back. We'll figure out about the little tech issue that we had there. Thank you. All right, guys, let's go ahead. Let's get out of our first interview. I hope you guys enjoyed that. We talked a little bit about the Investor Movement Index. So if you want to find out about that, go ahead and look that up with TD Ameritrade. I'm telling you, it's an interesting index there. It's something that I haven't seen done too often. And one of the things, like he stated, it's that it's on real data. It's not just a consumer survey. It's based on net buyers and net sellers. So take a look at that and see what you guys think. All right, let's get out of that. Let's go towards some of our other topics on the day. We can get into our earning stocks. Let's go to Palantir. Palantir had earnings this morning. Let's go to that. All right, so PLTR, let's go ahead. Let's take a look here. It looks like it did sell off on that earnings and continuing to hold the losses here. We did get a little bounce back, but it didn't hold for too long. Palantir here, EPS coming in at a loss of 1 cent here, and the miss of 3 cent estimate, sales at 473 million, beating the 471.34 million estimate. Light guidance, they did see Q3 sales at 474 million on the low end, 475 million on the high end, versus the expectation here that was 506.88 million. So big pulling off there on the guidance for Q3 sales. And I think that's definitely what hit it here. Now, the question is, will it start making up some of these gains? Like we've been seeing a lot of these kind of stocks that had bad earnings make it up. One that I can remember is Roku right off the back. And you can see here on the daily, man, that closed the gap down really quickly. So I'm wondering if that's what we get also in Palantir. It's interesting to see it. It's down there towards $10. I talked about how I wanted to see it get back towards 12, and I wouldn't get really bullish until that. And I'm kind of glad I didn't, because it turned around really quickly once it tried to get back up there. Of course, maybe some overhead selling supply, but with a Q3 outlook like it put out, it's just going to battle here to try to come back. We'll see if it can get back towards that $12. Tyson Foods, the next one up. Let's go towards that one. How's Tyson Food performing right now? I think TSN, it was down here. It's interesting to kind of watch how this has really turned around. You know, a lot of people were looking for some food inflation, and this was one of the trades that was given. Even myself was looking for maybe Tyson Food to get some lift. But EPS coming in here at a miss of $1.94, missing the $1.97 estimate. Sales at $13.49 billion. Beating the $13.24 billion estimate. We'll see what happens. Of course, some of the kind of value and growth has been changing hands here, and you're starting to see these farm products continue on down. Let's take a look at farm products overall, how that's been working. You can see we bounced from the bottom, just like a lot of stocks in the market. Now, the question is, are we going to take another leg up or a leg down? Is something that I'll keep watch. You can also take a look at ADM. ADM, Archer Daniels has been trying to make us move back towards 85. But if that one turns around, even a strong one, you'll start seeing TSN also follow. And this was a big hit right back down towards support. Big support around 81.72s, 81. If it can't hold 81, you can see that next leg down coming into the 79 outlook for Tyson. We'll see what happens. And if chicken can make its way back, I remember playing it back when it pushed this push towards 100. Ever since then, it just hasn't wanted to come back there. We'll see what happens in Tyson Food. All right, getting out of Tyson Food, I did see a couple other stocks making big moves today. You guys can keep watch to see what happens. Let's take a quick look at Nvidia because I think that's what really drove the market today and also it's continuing us down. Will we break down that 172.43? I think that could continue some leak in the Qs. You can see the Qs heading down towards the low of the day. We'll see if it breaks down that low of the day. Right now I have it as 320.14s. Yeah, 320.14 is the low of the day. We'll see if we get through that level. And this is interesting because we're really starting to see some of this tech really start turning away fast. Nvidia is down 8%. How's AMD doing? AMD's down about 1.9%, right above the VWAP. So let's see what happens with AMD here. Does it hold the 100 or does it come right back down and break that 98? If it breaks that 98, you already will see that tech wreck continuing to hit the tape. I'm wondering if this really takes down the whole industry or if it's just going to go ahead and just hold on some of these gains. TSM also starting to break down. This is one that I was starting to look at for a potential short opportunity, as of course we hear more and more mentions of Taiwan and some issues that could happen. And so I think that 90 turnaround, that could have been that level to definitely get into it. Now you're starting to see it come down here. We'll see if it continues to leak. Microsoft down about 1%. I was looking at Apple to see how that one was performing. It's just going sideways right now. But we'll see if it can get back on up there to 167. As long as it holds 159, I'm still bullish on Apple. We'll see what happens there. Meta's actually up today. That's interesting. I need to look at why is Meta up today, but it doesn't look too bad. It's up about 2.57. Probably has some news that I missed there. But hey, like always, we try to catch every news here. Sometimes we're going to catch them. Sometimes we're not. All right, let's get out of Meta. Let's get out of kind of the tech game. We'll see what happens there. There's a lot to take a look at. But like always, you just never know with this market what's going to hit the tape. Like a lot of people, I thought were caught surprised with that Nvidia this morning with pre-announcement. But can't blame people for being surprised on that. I don't think anyone was expecting that to hit the tape. All right, let's go towards some of the stocks that you guys wanted to take a look at. Looks like someone mentioned WBD. Warner Brothers getting some lift. Honestly, this is one that's really hard to call the bottom on. Warner Brothers, remember, this one blew up a hedge fund in the 70s when it came on down. Now we're looking at it. It's at 1450. We'll see what happens here on Warner Brothers if it ever really catches the bottom. For me, it still hasn't caught the bottom, even though it made that lift back up towards 1750s. And it just came right back down after their earnings and their subscribers came on out. All right, let's take a look at some other ones. I know that you guys were looking at some cheaper names here. I can't blame you guys for taking a look at it. See Hellbiz being mentioned here. Let's take a look at that one. That's a big mover and gainer on the day. It's just trying to keep the gains going here. It's had about, I would say, one drive. Yeah, you could put this one drive here, one drive, two drives, three drives. Let's see if it can get that fourth drive and get through 175 today. Close above that 175 would definitely have it more in that bullish sense. You could see a pullback right back down towards that 150 as you're coming right into resistance above it around the 181s and 170s. Could see this turn around. And of course, keep watch some of those high short interest floats that we were watching today, AMC, Triple BY. What happens with those? Do you get another lift going into the close? Is something I'll be watching. Triple BY trying to make its way back. Also GameStop. Oil is relentless. I agree. We're going to take a look at oil coming on up, of course, with none other than Thomas Hayes. I know that you guys are excited to talk about oil. We'll dive into a couple of oil questions. If you guys have any specific questions, you guys can throw it up in the chat too. Don't feel like you can't give a question in the chat. You guys are more than free to throw it on up. That's what Benzinga is really all about, is giving you guys the opportunity also. All right, let's go towards, let's take a look here. I wanted to take a look really quickly at kind of the reopening trades to see how those are behaving. Of course, Airbnb reported last week, and I wanted to see if we were going to get through that 120 level. Looks like we're starting to pull back a little bit on some of these trades like Hilton. RCL, of course, we had that offering and it actually went up on it. Now it's starting to pull back. So a little part of me is starting to see some of these trades turn back around. We'll see if some of these gains just kind of give it on up, or does it continue pushing? One that I'm watching, of course, to take a look at growth is ARC. ARC, we've talked about how it rejected this 45 breakdown. Now it's been making its way back to resistance, holding this 49.15, 49 area on pullbacks. Close above 50s is really good for ARC here. And we're continuing to see some of these stocks get off the ground. Today, Signify Health putting out some news. Also, we can take a look at this one, SGFY. Why did this one jump? Well, following a Wall Street Journal's report that CVS is planning a bid on the home health service company. So you could see CVS take a little bit of a hit on the downside, and SGNFY get that lift. Signify Health, we'll see if it takes that next step up. Of course, this is in the RKK, and so Kathy's not mad, and she's getting some nice lift above. We'll see if this one can continue making gains. All right, let's go ahead. Let's get into our next interview. I'm going to get out of the charts here. Going to go play a quick trailer, and then we'll dive on in with our next interview. Hope you guys are excited as I am. We'll get into Thomas Hayes, chairman and managing member at Great Hill Capital. Got some interesting questions to talk about. And like I said, feel free to drop a question in the chat. I'll ask Thomas coming on up.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, let's go ahead. Let's bring on Thomas Hayes. How we doing? Welcome back. It's good
Doing great, Mitch. Glad to be here, Mitch. Thanks for having me.
Yeah, excited. I just saw something hit the tape, so might as well just ask you about what do you think about it, Thomas? So I just saw right now Boeing's Dreamliner's deliveries to resume in the coming days. It's, of course, coming from the FAA. How do you feel this will affect Boeing? I know we've had some recent delivery mentions, but seems like this is a really good outlook for Boeing here.
Yeah, I love this type of headline, Mitch, because Boeing has been a chronic disappointer for the last year and a half. I mean, it's just been tape bomb after tape bomb, mismanagement after mismanagement. And what I like about the stock here, Mitch, is the fact that no one's paying attention to it anymore. Everyone's been burned on Boeing. They've given up on the stock. And now that good news is actually coming out and the stock is silently moving up, you hear no one really talking about it other than guys like you who are paying attention to everything. And I think it's a sleeper that could do very well over the next 12 to 18 months. So good to see this good news, but no one's paying attention, and that creates opportunity for smart value players.
Definitely. It's been hanging on too. I would think that it was going to pull back, but it just hung on to this trend, this recent trend. So it's going to be a fun stock to keep on watching, especially if you hear more and more mentions of deliveries of that 787 Dreamliners that has been halted for 2 years. I mean, it's been a while since we've heard that kind of get the resume. And I think everyone was watching the FAA if that news was actually going to hit the tape. So there we have it. Let's get out of that. Let's talk a little bit about, I'm going to play a fun game with you. Let's do over under on the CPI estimate. 8.7, of course, the estimate. And the next question following that would be, how would the markets, you think, react towards that if it's over or under?
I think it's going to be under. And if you look at the Cleveland Fed, they have some real-time inflation metrics. It's actually pointing to 27 basis points up year on year for July, which would be about 3.4% annualized. If that's the case, that's going to take the market by storm. And it may, in fact, negate what we saw from Friday. That jobs report came out super, super hot. and kind of put the Fed pivot narrative on the back burner in the short term with that many jobs created and the unemployment rate at 3.5. Everyone had been kind of positioning for a pivot in September. That took that off the table. But if you do see the under, like I'm talking about here, it may bring that back on the table. So we're pretty optimistic looking at the Cleveland Fed data. We know that commodities work on a lagged basis. They rolled over in June. You're starting to see a little bit of in the cash register. Even Elon Musk said we're past peak inflation. He's seeing it in component parts for his cars. So that would be a very pleasant surprise and potentially offset the good news, bad news of Friday.
Yeah, now if we do see it come in under, all right, so the scenarios hit, let's say, I don't know, well, let's say 8%. How will the Fed be handcuffed here, or will they not be handcuffed here if they start seeing inflation turn around? Of course, we saw the increase in the jobs number. That's why I think they are a little bit handcuffed here, because there's a strong labor market, but of course, their main focus was inflation, and they're starting to see it trickle down. What will they be left to do?
Well, if it comes in under, that gives them the ability to raise less than anticipated, which is what the market would like to see with inflation coming down. So, the fact, what you see a lot from the Fed at this moment is jawboning more than action. And the reason that they're doing jawboning, and no one's really talking about it, is the fact that our debt to GDP ratio is 125. They're limited in how high they can go without making the debt servicing unsustainable. So they've been doing a great job of talking inflation down, talking demand down, slowing the economy down. But if you think about it, Fed funds rate at 225, 250, that's where we peaked at the last tightening cycle in 2019. So, without what we saw on Friday, it wouldn't have surprised me if we saw a pivot in Jackson Hole. With that strong jobs report, it's probably going to be delayed until September. Maybe we get one more hike. But the key, as you said, will be the CPI and the PPI numbers this week. And we're definitely taking the under. They've been stubbornly high, but I think on a lag basis, we're now going to see it. The other thing that's critically important as it relates to inflation, everyone always looks at energy and commodities, but it's used car prices and new car prices. They've been unnaturally high because the demand exceeded supply, and that was largely a function of a shortage of auto chips. Well, you spoke to the Nvidia pre-announcement that their earnings were going to be weak on the basis of the consumer side, video gaming, crypto mining, etc. We've seen that across the board, whether you're talking about Taiwan Semiconductor, NXPI, Texas Instruments, Qualcomm. They say the consumer and the consumer electronics side is all slipping. PC demand is slipping. But guess what that's created? They've been able to reallocate capacity to auto chips, and that demand is backlogged for 2 years. New car demand is backlogged for 2 years. And as those chips continue to roll in, which all the auto suppliers spoke to on their calls, they started to roll in the last 4 weeks of June after the China shutdown was done. Ford maintained their full year production guidance and earnings guidance. GM maintained their full year production guidance despite having such a horrible Q2. So as those chips roll in and you see the massive new car production and those 100,000 cars that GM couldn't get off the lot because they didn't have chips now getting onto the lot, that's going to bring down used car prices dramatically as a glut of new cars come online. And that's going to bring down inflation dramatically. So I'm less worried about inflation than most, albeit we just passed a big spending bill in the Senate. I know it's called tax and spending, but we know what it actually is. So the market's kind of trying to digest that if that gets passed in the House, which it likely will. But all in all, inflation, I think, certainly has peaked, and it would be nice to see it show up in the numbers this month. Optimistically, and certainly by next month on a lag basis, but I'm definitely going to take the under.
All right, now what opportunities are you seeing arising from the passing of the Climate Inflation Reduction Act? Is there any opportunities that are rising? I know that JP Morgan coming out with that call on First Solar about potential 20% upside. Do you see any opportunities coming out of this bill?
Well, I think the buybacks are going to be accelerated. I think companies are going to now, they've got record cash on the balance sheets. They're going to now look to the tax kicking in 2023, and all the buybacks they have slated in their authorizations for 2022 and 2023. I think we're going to see a lot of that accelerated into the end of 2022 so they can do it without the tax, and that's going to create a natural bid for the market. I think the other thing you saw today on the news was biotech was up big this morning. It's cooled with the market since, but it's still positive on the day. And people were scared about this drug pricing provision. And the good news is it's less punitive than anticipated in that it doesn't go into effect till 2026. It only goes into effect on a small number of drugs starting 4 years from now, and on no drugs in the first 13 years. So it's only off-patent drugs that this could potentially affect 4 years out. And I think the drug stocks and the biotech stocks got bid, and they've continued to follow through. I know we've been on your show many times since May, which was the lows, saying biotech, biotech, biotech. Well, now you've got the XBI some 40% off the lows since June. And we think if you look out over the next year and a half plus, it's just the beginning. You've seen animal spirits with a lot of deals, even one deal announced this morning, Pfizer buying Global Blood Therapeutics this morning, another multi-billion-dollar deal. That's, we're approaching a couple of dozen, and just in the last 2 months, animal spirits are back. A lot of drug approvals now coming through the pipe as the FDA takes its focus off of COVID and puts it back on drug approvals. The trials are back in effect now with people willing to participate in the trials. So those are some things we look at. But back to the point about auto suppliers, which I know we've talked about on your show as well, this was wholly dependent on the chips coming in because the demand for new cars has been pent up now for a year and a half. They just haven't been able to supply it. I think there's going to be a huge opportunity in our third largest holding, which we may have mentioned with you in the past month or so, was Cooper Standard. They reported on Friday they were up 69.83% on Friday. That's a long-term play. The reason it was so beaten down was they've got some debt they have to refinance before the end of the year, which we think that'll get done. Management said as much on Friday's call. And that stock has followed through today, which was nice to see after such a big move on Friday. But if you look out 3 to 5 years as they get back to normalized EBITDA, this could be a many multi-bagger in our view.
Something definitely I want to keep an eye out is how that reports on the CPI. And so I'll keep watching exactly what you're mentioning there. Do we start seeing that shift? And will we start seeing some kind of new sales really start getting off the line? Because a lot of that issue has just been, like you said, not having the chips. And now if we are going to get that kind of push in the chips because, of course, the turning away from the gaming, that could definitely drive some of these stocks. Now, one area that I have to ask you in is, of course, is oil. Are you bullish or bearish oil stocks from here? It's been a tough call. I would like to see how you look at it.
Yeah, well, we were pound the table bulls on oil stocks in 2020. We sold them off earlier this year in the Russia war strength, and maybe a couple of months too early, but that was a huge trade for us over a year and a half. Made a lot of money there. And now looking forward, we've been less interested. We said the trapdoor was going to open sometime in the middle of the year. All these people chasing oil who hated it in 2020, loved it in 2022 when it was at the top. The trapdoor was coming, and sure enough, it is. And the trapdoor has knocked a lot of wind out of these stocks. So I'm not an aggressive buyer. The other thing that no one's really paying attention to is the rig count. That rig count now is 670 or so, 674. I'm sorry, 764. That's down from 790 pre-pandemic, but it's up from 244 at the pandemic trough. So that is a big factor that while everyone's looking to beg Saudi Arabia to pump more oil, we've got a lot coming online in the United States, and I don't think people are fully accounting for that moving forward. So I'd say I'm agnostic here. I don't chase things that are up. I buy things when they're out of favor, and then I wait for everyone to get interested in them, and I lay it off. So we just do that over and over. Talk to me about some things that no one loves, and I'm interested.
There you go. There you guys have it. Something to keep on watch, the U.S. rig count. I appreciate you, like always, Thomas, bringing a little bit of extra. Now, the last thing I'll leave you off to is there any kind of plays that you're watching to kind of continue moving? Is there any opportunities you like right now?
Yeah, I certainly think you want to keep your eyes on the auto suppliers. Now that the chips are coming in, they make their money when OEMs, Ford, GM, et cetera, ship cars. And now that they're going to start shipping like crazy with the chips coming in, the auto suppliers have huge operating leverage. They've been kind of in the bullpen. Now they're on the mound and they're going to start throwing strikes left and right. Pay attention there. Biotech is going to continue to follow through. And I know, China tech, I'm like a broken record. It hasn't worked yet, but that's going to be a trade. The number one thing you need to see if you're skeptical about China tech, just watch the US dollar. If you do nothing else, if that US dollar continues to weaken into year end, you want to be in emerging markets, and China is the heaviest weight in emerging markets. So if you don't like China, just wait tight until you see that dollar start to crack, and that'll be your signal to maybe get some exposure.
All right, we'll see what happens. I know a lot of people are thinking about China, but probably in another sense. They're thinking about worrying here, and you're completely giving us another side to keep an eye out. Appreciate that, like always. Thomas Hayes here, chairman and managing member of Capitol Hill. We'll definitely have you back on.
Thanks so much, Mitch.
All right, guys, that's going to do it for us today on Stock Market Movers. As you guys see, the breaking news of the Boeing really coming on in there and shaking us up a little bit. As you see here, Boeing just taking off on that. Nice news there. We caught it really early here, so I wanted to make sure I mentioned it. It got some nice lift there. Boeing now up there towards 170 off this news, and a lot of people were watching this. And I think that, if you take a look, the insight was pointing towards the upside as they were even making deals on the Dreamliner before this news came out. So it's something to keep on watch how Boeing will keep performing. It looks strong right now. So if you're taking a look at Boeing and seeing that lift, take a look at some other ones also. We'll see what happens here if we can continue seeing some lift in some of these. But it doesn't look too bad there with that nice lift. The UAL airline getting a little bit of lift also on this. But nothing as much as Boeing getting that push from 166 to 170. Not a bad little headline hitting the tape right when we saw it. All right, that's going to do it for me today, guys. I'll see you guys a little bit later on at the close. Like always, that's the show where we cover the market closing with Joel Elconin. He'll take a look at his kind of outlook and what did we see in the markets. I know that we'll probably talk a little bit about Boeing and some other stocks that made some move. We'll see if the tech wreck continues with Nvidia's down move today. That was the question of the day. And of course, we'll keep watch on what happens with Nvidia. It tried to come back down there towards the low of the 172. Could not break through that 172.43. We'll see if we get through there by the end of the day. That would be the outlook that it continues on the downside. All right, that's going to do it for me. Like always, if you guys enjoyed today's topics, we talked about the market topping, Inflation Reduction Act, CPI data, New York sentiment survey, Fed interest rate outlook, Nvidia tech wreck, Wall Street bets, short squeezing all around, Pfizer, Tyson, and Palantir. Those were our topics on today. And of course, we had some great guests on. Shawn Cruz, head trading at Strategist at TD Ameritrade. Thomas Hayes, appreciate you like always. Some great guests, great experts, and of course, keeping you guys in the informational edge. Give us a thumbs on up if you guys enjoyed today's show, and I'll see you guys in a little bit on At the Close.